Let's ask an analyst about this. Will Slabaugh is standing by. He covers McDonald's as an analyst at Stephens. And, Will, what do you think? The stock is under quite a bit of pressure right now. What do you think happened?
Yeah, it is. I think there are a couple things in the release that investors are looking at early. So you mentioned global comps were actually better. International was really strong. The U.S. slightly weak, 4.8 versus 5.2. I don't think investors would just sell that off in and of itself. The G&A number was a little bit high, and they've made a couple of technology acquisitions, as you guys have noted, in the past couple of quarters. And I wonder if there's some staffing up around that could have led the G&A to be a little bit high. And then also taxes were a little bit higher too. So it's not a maybe as clean of a miss as it looks initially. But either way, those couple of things I think are what's leading it lower early.
None of those things would explain why the stock's down 3.5%. Well, unless it's run up a lot, right, Will?
It's had a heck of a move, and really, nearly a straight line from 88 whenever Easterbrook came in, and he's obviously done a very good job. The U.S. number is going to get most of the focus here, where they put up a 5.7 last quarter. It's a 4.8 this quarter. I think underlying that, though, even with the 5.7 last quarter, it was all check-driven, so there was negative transactions. So you would imagine with a 4.8, you probably have even more negative transactions. That's a big worry for investors. It's a big worry for franchisees and the company as well. So I'm sure that's going to be something they're going to address today is how do you turn that around? What we've been hearing even more recently is that has been getting a little bit better as we exited the quarter and entered October. So a lot of that's kind of breakfast-driven, getting more people in on value. So I think that's going to be some of the drumbeat that we'll hear.
Look, right now the stock's down by 2.9%. Obviously, none of this is really reflected in the press release. You'll hear more on the earnings call. But what do you do right now? Is this an opportunity to buy, or do you wait and see what they have to say first?
I think it's an opportunity to buy. We like McDonald's. The economics are the best of any of its peers. I think the business momentum is actually going to pick up a little bit in the fourth quarter. And this is a business we think is really well set up as we go into next year and can weather any economic cycle. So while some of the momentum may be coming out of it today after the 5.7 going to a 4.8 here in the U.S., I think longer term this business is better situated than really any of its peers.
Will, is there anything to what Reuters, is that a millennial writer that likes Beyond Meat that decided that McDonald's is moving too slowly to adopt meat alternatives? That was actually cited in the piece for why same-store sales are weak. They're losing ground to their competitors that are offering Beyond Meat. Is there anything to that?
I think there's a small bit to that. And I do think McDonald's is going to get involved here. Actually, we think they could do something in the alternative chicken space, which could be interesting next year. No one's really gone that direction. They have an exclusive protein relationship with Tyson.
I was going to say
they do,
like that too, but
not alternative yet.
Mad. I was going to say, well, the meat that they already serve is kind of an... No, I love McDonald's, and it's fresh meat and everything else.
So I think they'll get there. Actually, interesting...
Go ahead.
In this quarter, the big quick service news was around Popeyes and their premium chicken sandwich. So we're seeing consumers go both premium and then also alternative. So it's either you're offering me something really, really good I can't get anywhere else, or you're offering me something that's plant-based.
What's the alternative chicken, Will? I don't even know what you're talking about. Is that bless you.
So it's plant-based the same way that
I'm not.
Don't hold it in like that. You're going to pop out a kidney or something. You got to let that out. Let that go.
Let that sneeze go.
Let that sneeze go, man. That's what's the alternative chicken? Is it a Beyond Meat product? What is it, Will? Like
so Tyson has a venture where they have a plant-based product, which it's the same way beef is, alternative beef is plant-based.
Like?
It's plant-based as well. It's pretty good. The main point here is that it tastes very, very similar to the original chicken or original beef product, and this so far has been testing well.
Any negative effects a couple hours later or no?
That's a good question. I can't really answer that one, but
okay.
We'll be watching.
All right. All these things need to be tested thoroughly.
We should point out again that the revenue line came in just about in line with expectations, $5.43 billion versus the $5.48 billion the street was anticipating. But again, it's a decent chunk of a miss, $211 versus the $221, so a 10-cent miss. Mm-hmm. Will, you think it's because of the investments that they're making in the business right now, some of the additional technology pieces that they brought on board?
I do. So G&A is really where they missed it for us as far as the earnings go. And like I mentioned, there's a slight higher tax rate than what we'd modeled as well. But G&A, investments in the business, I assume a lot of that is technology.